Hi, I'm Ankit from ValuNest, and I specialize in research-led property investment strategies. I help property investors make confident, data-driven decisions by focusing on numbers and fundamentals and not just the headlines. In this video, we are taking a deep dive into the Hunter Valley property market and, more importantly, why the data suggests this region is positioning itself strongly heading into 2026. Now, Hunter Valley is not a speculative market at all, and it is not driven by hype, and it is not reliant on a single industry as well. Instead, it is supported by strong population growth, infrastructure investment, employment diversity, and affordability, especially relative to Sydney and Newcastle. So today I'll walk you through the key numbers behind the Hunter Valley, what the charts are really telling us, and how investors should think about this region strategically. So let's get into the data. Before we look at individual suburbs, it's important to understand why the Hunter Valley works as a region as a whole. Now, the Hunter benefits from, first of all, its proximity to Sydney and Newcastle, a growing commuter population, a very strong employment across health, education, logistics, energy, defense, and mining, and a major pipeline of infrastructure investment. Unlike many regional markets, Hunter has depth, diversity, and scale, and that's what separates sustainable growth markets from short-term performers. So let's start with population growth, because this is what underpins everything about the Hunter Valley. Across Hunter Valley, Maitland is projected to grow to around 145,000 residents, Cessnock to grow around 90,000 residents, Singleton, Muswellbrook, and the Upper Hunter also continue to expand. At a regional level, the Hunter is on track to approach 1 million residents by nearly early 2030s. Population growth creates housing demand, rental demand, infrastructure demand, and more importantly, it creates long-term price pressure, not just the short-term spikes, and this is something we always look for when we are talking about long-term growth. Now let's look at the pricing, because affordability is one of the major reasons why buyers are moving into the Hunter. Key areas like Maitland sit around 620k, Cessnock sits around 660k, Singleton around 675, Muswellbrook is closer to 575k, and Rutherford sits around 730k. So when you compare this to Sydney or even Newcastle, the Hunter offers significantly lower entry points while still being part of a large functioning economic region. Now, this affordability is one of the key reasons why owner-occupiers are moving in. Investors are finding yield and demand remains resilient in the Hunter region. One of the most important things we look at ValuNest is market depth. High transaction value means liquidity, reliable data, and real buyer participation. In the Hunter, suburbs like Cessnock and Muswellbrook are recording more than 300 house sales annually, which is massive. Maitland and Rutherford consistently recorded. That tells us that this is not a thin market. This is a very active, well-traded region which reduces volatility and improves confidence in the market data and investing in the same market. Now let's talk about the rental market, because this is where pressure is clearly visible. Across much of the Hunter, vacancy rates sits below 2%, which is very good. In some areas, effectively near zero. Low vacancy rates indicate strong tenant demand, rising rents year on year, and improved holding comfort for the investors. This rental pressure provides a floor under prices, especially during periods of broader market uncertainties. Now let's talk about the infrastructure and employment pipeline. This is where the Hunter Valley nearly separates itself. Now there are billions of dollars which are already committed across multiple sectors. Major transport upgrades including road and bypass projects, large-scale energy investments including renewable energy zones, hydrogen and battery projects, ongoing health infrastructure expansion, and significant residential development corridors such as Huntley and Greater Maitland. This matters because infrastructure creates, first of all, jobs, population inflows, and sustained housing demand. Now this is not a proposed investment. Most of it is already funded and underway. So we are confident that these projects are happening and there will be demand in the coming years as well. So what is the key takeaway? The Hunter Valley isn't about chasing quick wins. On the contrary, it is about buying into a growing regional economy with strong population growth, solid affordability, deep transaction volumes, and very tight rental markets. We are also seeing long-term infrastructure support. So what does this mean for the investors? First of all, low volatility than smaller regional towns, better data reliability, and the potential for steady compounding growth over time. So the Hunter Valley continues to stand out as one of Australia's most balanced regional property markets, and the best part is it is not driven by hype and it is driven by very strong fundamentals. So when population growth, infrastructure, affordability and demand all move in the same direction, markets tend to perform well over the medium to long term. So if you would like to understand how the Hunter Valley fits into your broader property strategy and how it can help you reshape your portfolio, or which suburbs align best with your goals, feel free to reach out to us at ValuNest. Thank you for watching the video and I'll see you in the next one.